Hello guys, welcome back to my channel once again. This is King Forex here. So let's quickly dive into how to analyze the market. So this is the USD card here, and this is how to analyze it. So first of all, you simply quickly go to the daily time frame, so 1D, and then you look at your lows and your highs. So let's pick this, and then we go to pick this line and put it somewhere here to show our low, and then we pick it to show our high here. So now using this low and this high, look at our zones. So we pick the rectangle here, then we draw the first zone to be somewhere down here, something very simple like this. Draw another zone to be somewhere up here, another simple one like this, another zone simple like this. Alright, so you have your two zones, then you want to draw another zone in the middle to show some where the market can move to. So normally this is how I do my trade. I look at the middles, the ups and the downs, thinking that the market will go up and it will come down, but in the middle, that's where the market consolidates mostly. So I don't trade there. I wait for it to break away from that middle gap, and then we enter the trade to either a buy side or a sell side liquidity. But mostly the market will go up, or let's say down, and we'll come back to the same zone again if it's the first time of having that low here. So this low, the market went up and it came down again to that same low again, and then it will go up again and come down to that same zone again. But look at something here, we're having some pattern formed here, that is the W pattern here. Once you see that W pattern being formed here, it communicates something that there is going to be a reversal of a trend. So once you see that, you wait for it to break that neck. So now when you're having this, look at this thing here. Let's draw it somewhere here. Now you see it's breaking the neck. So once it breaks this neck you're having here, you can see that it's going a reversal, or let's say the other direction, opposite side, right? So here, if you are a trader, you enter a sell. Let's say from this side you saw it's being the low here, you enter a buy from here, and then you put your TP somewhere around this here. This normally will be my first TP. This low here, this low will be my first TP. So here's this TP here. So let's put something here. So this will be my entry, and this will be my stop loss, and this will be my take profit here. So nicely taken, it hits my TP, right? And when I see this candle being formed here, it shows a reversal and a very strong bearish movement. So here I also go and I'll place my entry here once I see that being formed, and I'll move my TP to that level down here, but I won't make it go deep down. I'll be somewhere below the candle, the body, and then my stop loss will be above the previous high or the high, and that one simply my TP will hit, right? And once I see that it hits my TP, immediately I'll put another entry there to go on another reversal, because it's going up again. I know to go there, so I just come and put my another entry here, and then my stop loss same thing below the previous low, and my TP same place, this TP here again, and I get another TP being hit. So once I see it going up to this zone, that's why I drew these two zones earlier. So once I see it getting up to this zone, immediately I will then rush here again, and I'll put my entry somewhere there again, and I'll wait for it to come down and hit my TP down the zone here again. And I do that all the time, and I hit my TP back to back. So this is simply how I trade most of the time. So once I see this breaking the neck, I will also same thing come here again and place my entry down at the neck. So let's try that one to see how I'll come here, break the neck. So I know once it breaks the neck, it always comes back to a test before it goes that direction. So I'll come here and put my entry at the neck, right? So I know to come back to a test. So I come and put my entry here, and then I'll put my stop loss here, and the middle zone, right? Okay, then I'll put my TP somewhere above this high here. So by so doing, the market will also same thing with my TP again, right? So at this point, I know I'm having some highs and lows now. So this is my first another low recorded here. So I'll then come here and put my zone here, having the low here. This becomes my next zone, my low zone. Yes, this is it. So the same thing as I was teaching you earlier will happen again. So it will come back and test the zone again, and I'll put another entry there. So it's back to back, back to back, back to back, back to back. Another entry, the same place with this one to hit, right? So that is how I trade most of the times. My simple strategy I use to get some pips, right? Okay, so this is a 1 day time frame. You can go down to the 4 hour time frame, you get the same thing being done. Let's go down to the 4 hour time frame and see what happened there. This is a 4 hour time frame. You see the 4 hour time frame is simply drawn here, showing here 4 hour time frame. So normally when I come to this 4 hour time frame, I want to find the FVGs, that's the fair value gaps, before I trade or enter into any market, right? So this is the 4 hour time frame seeing here. So let's look at the M pattern. You can see some, or the W pattern, you can see some. So now you can see one here being formed, the M pattern being formed here. So once I see this, immediately I know I can enter the market, right? So this is the M pattern being formed here, right? Good. So once I see this M pattern being formed here, I know that at this point, wait, okay. So once it breaks the neck, I know any moment from now it's going back to retest and then to come down a direction, right? Any M pattern, the M pattern shows a reversal to the sell, like a sell reversal, right? Okay, so it broke the neck somewhere here, and you see, as I said, it comes back to retest it, and then it goes full down. So once I see it, you see it broke. Let me remove this one. It broke somewhere here, right? Okay, so sorry here, and then I'll put my entry there. Once it's an M being formed, I don't fear, I'll just enter, right? So it break the neck, then I can just put my entry there. And I expect it to come down. You see, good. I put my entry there, and I put my TP somewhere around this one, this high here, and then I'll say boom, another TP. So it's always back to back, back to back, back to back. So you can try and apply the M pattern or W pattern in your trading, and trust me, you get many pips all the time. You get profitable very soon. If you are on a pop frame challenge, just try simply and introduce these M patterns, and you become profitable very soon. Is that okay? So the other one is being formed here, you see. So you simply, whenever you see that being formed, you start and then you just enter. That is one way of analyzing the market. Thank you. Subscribe and keep seeing more amazing content like this. Thank you.